We've got a fresh read on the labor market this morning. Private sector hiring, it picked up last month, showing some strength in the labor market despite recent signs of weakness and weak pockets. Yahoo Finance markets reporter Josh Schaefer has the details here. Hey, Josh.
Yeah, Brad. So the ADP report showing private payrolls, 143,000 ads in the month of September. That is up from 99,000 in August. So a pretty big jump there. ADP chief economist Nela Richardson on a call with reporters about a half hour ago said that she thinks this shows that the labor market's pretty healthy, and this is a widespread rebound that we're seeing in hiring, essentially arguing this fights back against the narrative that we are rapidly deteriorating. If anyone was sort of in that camp, data like this kind of hurts that narrative. Also within ADP, they have this thing called pay insights, right? So it's the insights for people that are leaving jobs or staying jobs and how much they're making compared to last year, their wage growth. She pointed out that for people that are leaving their jobs, it would pay growth fell to 6.6%, the lowest level in about 3 years. And she said when you take this and you look at something like what you guys were talking about yesterday with the JOLTS data, you're seeing the quits rate really low, right? Right now, people don't really want to leave their job. Well, they don't want to leave their job because they're not really making that much more money by leaving their job versus staying in their job. She said this puts the labor market in kind of a ideal equilibrium, a phrase we're hearing a lot right now with economic data. And she said, of course, the question is, how long can we stay in this equilibrium? But for now, it's a solid spot where workers should be relatively happy. They're making 4.6% year over year wage growth. Not bad.
Yeah, it isn't bad, especially when you put it in the context and you compare it maybe to some of the slowing inflation that we have seen, at least in recent months. But Josh, I guess my question, and pushing this forward as we look ahead to Friday, we haven't really seen necessarily a strong correlation, although I guess it's gotten a little bit stronger here over the last couple of months, between the ADP print and non-farm payrolls, which we're going to get on Friday over the last couple of years. But do you think this at all changes the calculus or outlook or optimism heading into Friday, maybe making it a bit stronger given the beat that we saw this morning?
I mean, look, you're right that we haven't seen a total correlation, but last month I do think there were some people in the economic community that took the weak ADP print to spin a jobs report that you probably could argue was weak or strong. It was kind of a toss-up. And they were like, well, the ADP data was bad too, right? So there's another drop in that bucket. If we're calling it a drop in a bucket this time around, it's probably a drop in the labor market's doing okay bucket. So if you have a mixed jobs report, now you have some other private data that supports it being solid. I think the read and sort of the reaction to this ADP report, we just showed the numbers for the expectations for September for Friday. If you get about 145,000 job ads, if the unemployment rate doesn't move at 4.2%, I think that's a solid read. That's what economists expect. It's anything that comes in, if your non-farm payrolls are significantly lower than that, if your unemployment rate goes up, that's when you're going to start to have discussions about, okay, is this slowing more than we thought?